Hey, it's Richard with Matthews Wealth Management. We are back for the M2 and balance sheet for the month of May 2023. I am trying to get these two videos knocked out back to back. We got construction going on at the church, and I'm trying to get it done while it's quiet. So, jumping in. All right, everybody knows this one, right? Does it look different? No, it doesn't. It's continuing its drop. I think I've got good news for this one, which is great. Yay, M2, it continues its descent. Good. Why? Because we hate M2. M2 is the amount of money circulating. The more money that circulates, the higher your prices go. That's inflation. This is technically inflation. The prices are a result of the inflation. So as we shrink the amount of money floating around, over time, the prices should actually come down, not just stop going up. So keep doing this. And that's a good month. The month of May was good. All right. What do the numbers look like? 20,673,100,000,000, which means we dropped less than 1%, but hey, it's okay. That's a good rate, right? We do that for 12 consecutive months, and hey, that's something. That's like a 9% of what we're doing there. Year to date, this was cool. I think I found something. I'm not sure if anybody does this, but we got two different numbers. My year to date, guess what? I leave it the same from January because it's year to date, but it changed, and I don't know why. That's pretty substantial too for January of 2023, but I went with the new number up top, and so that means we've shrunk our M2 money supply since January by only 2.67 or 6.65%. That's not the right trend, right? But maybe we're accelerating. Maybe that's a good thing. We'll see. In the last year, we've shrunk 4.5%. Cool, about half of the current rate. So let's keep it going. We've pulled back from, I think it was like 42 was the highest we ever got. Now we're only up by 34% over our pre-COVID. I mean, that's basically what this is, January 2020. So that was good to see. All right, balance sheet. Why don't we like the balance sheet? Because why does a central bank need to have any assets? It's kind of pointless. In fact, that's where the inflation comes from, is they monetize new debt. And so since nobody wants to buy this garbage debt that's issued, they buy it. In fact, I think the Fed's buying 90% of all new issued debt from the government. Go figure, because nobody else wants it. Full faith and credit, guys. So here's our annoying little TARP and bailouts. And then we still don't have a mortgage industry without support from just fake money. And then COVID, we're going to bail out the world. And then it starts this new, hey, we've got unemployment and PPP and all this stimulus stuff. And we're on our way down until banks start failing and you have this spike. Well, hey, that's kind of cool. It's come down from the spike. So other banks haven't continued to fail. Or have they? Because look, I don't know if you can tell. I looked at the number of how much had fallen off the balance sheet. This is weekly, right? The M2 is monthly. So on the weekly side of it, in the last week, they've only sold $1 million. That's nothing. Okay, like we're talking trillions, guys. This is 8.9 trillion. What are we down to? No way, 8.3 trillion. Sweet, we were at 8.9, so they've done a decent job of this. But that's a sideways, and so interesting stuff. This is current, right? Because we're in June, right? So the month of June, we basically stopped selling off of the balance sheet. So giving you a little bit of a answer to the test for June, even though I'm supposed to be covering May. But we basically stopped. Yay, cool. Another 0.8. Hey, it's kind of similar off of different numbers, 20 versus 8, but still, that's cool. In the last month, they have sold 0.8% of their assets, which they should have zero, right? Anybody want to tell me why they shouldn't? Why don't they have 100 trillion on their balance sheet? There's got to be a principal reason for that, right? And therefore, that same principle means they should have zero. So we're getting there, but we're not there. We're not even close. So year to date, again, we haven't done much, but we have picked up the pace in the last month. In the 1 year, 6, it's kind of similar on the M2. This is the problem. They've doubled their balance sheet. And what does that mean? It means it's changing the price of the bond market. We just saw that on the asset class one, so go back and watch that if you need to. But let's get to the actual numbers. The balance sheet has shrunk. I'm making it black when it's negative because it's good, by $68.437 billion that they've sold out to the economy, brought back the cash and destroyed it. Cool. Which leads to M2, which should have done it by that, and it did. and more. Yay. So M2 has been cut by $167.2 billion that no longer exist. Good job, Fed. Good job controlling M2 in your balance sheet. Just do it quicker. And fiscal cut, that means how much less did the Treasury issue? How much money did the government spend that they didn't actually have that they're going to put on the backs of your children and grandchildren? That's what it is. They shrunk that spending by almost $100 billion for the month. Cool. This was before the debt ceiling. So when we have a debt ceiling, they can do it. But let's see what happens in June. And that's a quick enough review for this. And construction hasn't started, so I'll let them start now. Thanks. We'll see you next time.